Welcome to the Deep Dive. We're the podcast where we cut through a stack of sources to get you well-informed fast.
And today, yeah, we're doing a deep dive specifically for you if you're gearing up for the ACCA financial reporting exam, the FR paper.
That's it. We're really focusing in on a key revision area today.
We are. We've got the official ACCA FR syllabus and study guide, the latest one, September 2025 to June 2026.
And there's also a visual overview document. It looks quite useful, mapping out financial statement presentation.
Exactly. It lays things out quite nicely.
So our mission for this deep dive, basically to unpack the key rules, the essentials for presenting single-entity financial statements.
And crucially, we're basing this only on what's in these official ACCA documents.
Think of it as, getting the core knowledge you need for the exam on this topic, straight from the horse's mouth, so to speak.
Good way to put it. It's probably useful to start by sort of placing this topic. Where does it fit in the bigger FR syllabus picture?
Good idea. So FR builds on financial accounting, FA, obviously.
Right. And the aim is really to develop your skills in applying those IFRS accounting standards.
So you can prepare, but also analyze and interpret financial statements for single companies and groups, too.
Exactly. And the syllabus itself is broken down into, 5 main capability areas?
Yeah, that's right. Area A is the conceptual and regulatory framework. B is accounting for transactions.
C is analyzing and interpreting.
D is preparation of financial statements. That sounds like our area for today.
It is. And E is employability and technology skills. Can't forget those.
Definitely not. But yeah, as you said, our sources for this deep dive, they really point strongly towards Area D preparation.
Heavily. Specifically, the requirements for presenting the financial statements of a single company. Not groups today, just the single entity stuff.
So we're focusing on the structure, the appearance, and what absolutely has to be included in those statements.
Precisely. The nuts and bolts of presentation, according to the standards.
And the visual overview document actually states that, doesn't it? The objective is describing general purpose statements and setting out presentation and disclosure requirements, structure, and minimum content.
It does. It's very clear.
Okay, now here's something that jumped out from the sources, highlighted right at the start in the changes summary. Looks pretty important for this exam cycle.
Ah, yes. You mean IFRS 18?
Exactly. IFRS 18, presentation and disclosure of financial statements. It's now fully examinable.
That is a major update, really significant. IFRS 18 effectively replaces the standard we used to rely on for this, IAS 1 primary financial statements.
So out with the old IAS 1, in with IFRS 18.
Pretty much. So when you're thinking about presentation formats, how things should look, what needs to be disclosed, IFRS 18 is your go-to standard now, based on these materials.
Okay, so IFRS 18 is the big one. What are the sort of fundamental ground rules it lays out? What do the sources say?
Well, the visual overview lists several key general requirements. First up, a complete set of financial statements, meaning you have to present all the required components together, not just, say, an income statement on its own. It's the whole package.
Right, okay. The full picture. What else?
Then there's frequency of reporting. The standard covers this. Usually it's annual, but IFRS 18 sets out the principle.
Annually is the norm, yeah. And consistency must be in there somewhere. That seems crucial.
Absolutely. It's listed right there as a core requirement. Consistency. You've got to apply the same accounting policies and, importantly, the same presentation from one year to the next.
Makes sense. Otherwise, how can anyone compare?
Exactly. The only real exceptions are if another IFRS standard forces a change, or if maybe changing how you present something actually makes the information more relevant and reliable. But generally, stick with the same approach.
Which kind of leads straight into the next point, I guess. Comparatives.
You got it. Comparative information. IFRS 18 mandates that you show the corresponding figures from the previous period for everything you report in the current period.
So this year's numbers next to last year's numbers.
Yep. Allows users to see trends, changes. And it's not just numbers. You also need comparative narrative and descriptive information if it helps understand the current period's statements.
Okay, so the basic rules from IFRS 18: present everything, report regularly, be consistent, and show comparatives. Got it. Seems logical for users.
It is. It provides that essential context. Now let's dig into what that complete set actually involves based on the visual overview and the study guide details.
Right, the actual statements themselves, starting with the big one, the statement of financial position.
The snapshot. The snapshot, exactly. Assets, liabilities, equity at a specific point in time. The sources really emphasize the key distinction here between current and non-current assets and liabilities. That classification is fundamental.
Okay, so splitting things between short-term and long-term.
And IFRS 18 dictates the required structure. There's a general layout assets first, then equity and liabilities, and really importantly, the minimum disclosure.
Meaning specific line items that have to be shown separately.
Precisely. On the face of the statement. The standard lists things like property, plant and equipment, intangible assets, financial assets, inventories, receivables, cash.
Payables, provisions, share capital, and reserves.
All those key categories, you can't just lump them all together as assets or liabilities. They need their own lines if they're material.
Right, clarity is key. Okay, what about the performance over the period? The statement of performance.
Yeah, the visual overview gives quite a bit on this. It covers the overall presentation of income and expenses, and it mentions categories.
Categories, how expenses are grouped.
Exactly, how you group your income and expenses. Now, the overview itself doesn't explicitly say by nature or by function, but those are the standard IFRS methods. You either group costs like depreciation, wages, advertising together, that's by nature.
Or you group them by what they were for cost of sales, admin costs, distribution costs, that's by function.
Correct. And the sources show that choosing which method you use is a key presentation decision you need to apply consistently.
So the standard gives you a framework for how you classify your costs.
It does. The statement also needs specific totals and subtotals. The sources highlight things like, well, gross profit if you're using that functional expense method.
Right.
Profit or loss before tax, definitely. And the bottom line, profit or loss for the period.
And minimum disclosure here too, I assume, like revenue?
Yes, minimum items on the face, just like the SOFP,
Right.
revenue, finance costs, tax expense, those are specifically mentioned as needing separate presentation.
Yeah.
The overall format has to follow IFRS 18.
Okay. And then there's OCI, other comprehensive income.
Yes, OCI, that collection of gains and losses that bypasses the main profit or loss calculation but still hits equity.
Like property revaluations or some
Right.
currency translation differences.
Those are classic examples. Now,
Right.
IFRS 18 sets out how you present OCI. You've got options. It can be in a single statement of performance showing profit or loss first, then OCI. Or you can have two statements. A separate statement of profit or loss, followed immediately by a statement showing comprehensive income, which starts with profit or loss, and then adds the OCI components.
Okay, choices there. And you have to group the OCI items too, right?
You do. The standard requires you group them based on whether they might be recycled, reclassified to profit or loss later, or if they'll never hit P&L.
Got it. So the statement of performance is pretty structured layout, subtotals, OCI presentation, all defined. What's next? Statement of changes in equity seems like the bridge.
It really is the bridge. It reconciles the opening and closing balances for each chunk of equity during the year. The visual overview points out the key information presented.
Which includes?
It includes the total comprehensive income for the period that's your profit or loss, plus all the OCI we just talked about. It also shows the impact of any retrospective changes, like fixing errors or changing policies, and importantly, transactions with owners.
Transactions with owners. You mean like issuing shares,
Yeah.
paying dividends.
Exactly that. Share issues, dividends, maybe changes in stakes and subsidiaries if they don't lead to losing control, all shown here. The overview also mentions the structure required and how you show transfers within equity.
Transfers, like moving a revaluation surplus.
Yeah, exactly. Say you sell a revalued asset, you might move the related surplus from the revaluation reserve over to retained earnings. That transfer shows up here. It basically links the equity section on the statement of financial position from the start of the year to the end.
Explains how all those equity reserves changed.
Yeah.
Okay. And the last piece of the puzzle, the notes.
The notes to the financial statements. Absolutely essential. They're not optional. They're an integral part of the complete set.
This is where all the juicy detail lives, right? The accounting policies, the breakdowns.
Absolutely. The visual overview highlights their structure. They need to be systematic. Usually you start with compliance statements, key accounting policies.
Like a summary of the rules you followed.
Precisely. Then you provide more detail supporting the numbers you see on the face of the main statements, like a breakdown of PPE movements.
Okay.
And then you add disclosures for things not on the face, but required by IFRS. The overview specifically pulls out disclosures related to capital share details, rights, etc., and then this huge bucket called other disclosures.
Which covers pretty much everything else.
Almost. It's vast. Think details on intangibles, financial instruments, provisions, contingent liabilities, related party transactions, commitments. Loads of stuff required by other specific IFRS standards gets disclosed in the notes.
So you really can't understand the full picture without reading the notes.
Not properly, no. They provide the essential context and detail.
Okay, so those are the main components. But the sources also mention something about aggregation and disaggregation.
Yes, IFRS 18 covers that too, according to the visual overview. It sets out the principles for how you group or separate information.
So what's the basic idea there?
Well, aggregation means you should group items that are similar in nature or function if they aren't material on their own. You don't need 50 tiny expense lines on the face of the statement of performance, for instance.
Combine the small, similar stuff. Makes sense. And disaggregation.
That's the flip side. Items that are dissimilar in nature or function, or items that are material, must be disaggregated, presented separately.
So don't hide important things by lumping them in with others.
Exactly. The goal is balance enough detail for users to understand, but not so much detail that it obscures the important stuff. You wouldn't say hide a massive one-off restructuring cost within administrative expenses without highlighting it. It's about making sure material items, things that could influence decisions, are visible.
Seems like there's a bit of judgment involved there, deciding what's material or similar.
Oh, definitely. Materiality judgment is key throughout financial reporting. And related to this is offsetting.
Offsetting, netting things off against each other.
Yeah. And the general rule reiterated in the sources based on IFRS 18 is don't. Assets and liabilities shouldn't be offset. Income and expenses shouldn't be offset. Unless
a specific IFRS standard says you can or must.
Correct. For example, you generally can't just net off your bank overdraft against your cash balance unless specific conditions are met. Showing the gross amounts usually gives users better information about the company's situation and its risks. Think about revenue and cost of sales. Showing both tells you more than just showing the gross profit figure alone.
Okay, got it. No netting off unless specifically allowed. So we've covered the main statements, IFRS 18, the principles. How does knowing all this detail actually help you pass the FR exam? Let's connect it back.
Really important connection. The detailed study guide, which underpins all this, flags the learning outcomes for preparing and presenting statements, mostly at intellectual level 2.
Level 2, that's application and analysis, right? Not just remembering facts.
Precisely. Knowing the definition of PPE is level 1. Being able to take a trial balance and actually prepare a statement of financial position according to IFRS 18 format, correctly classifying current and non-current, showing the minimum line items, that's level 2 application.
Okay, so you need to be able to do it. And where in the exam are you likely to have to do it?
Well, the syllabus structure strongly suggests Section C, the constructed response questions.
The longer questions at the end.
Yes. You could easily get a scenario asking you to prepare a full statement, or maybe extracts, following IFRS 18 rules. That involves calculations and correct presentation.
What about other sections?
You could also see objective test questions. Section B, perhaps, testing specific knowledge points, like which of these items must be presented as a minimum line item on the statement of financial position. Or maybe a question about the presentation options for OCI.
So you need the detailed knowledge and the practical application skills.
Absolutely. And that ties into capability area E2, employability and technology.
All right.
Remember, the FR exam is computer-based.
Right. Using the spreadsheet tools.
Exactly. So when you're asked to prepare statements in Section C, you're not just applying IFRS 18 rules, you're doing it within the exam software. You need to format it, properly clear headings, subtotals lined up, using the tools effectively. It mimics what you do in the workplace.
So knowing the standard is one thing, executing it cleanly on the computer is another. Links the theory to practice.
It really does. And, stepping back, why do we even have these detailed rules? Why is presentation so heavily emphasized?
It must come back to the people using the statements. Investors, banks.
It's all about the users. If financial statements are presented clearly, consistently, using a common framework like IFRS 18, then users can actually understand what's going on. They could assess performance, financial position, compare the company to last year, or to competitors using the same standards.
Yeah, if it was just a jumble of numbers, it would be useless.
Pretty much. You can't do any meaningful analysis that's capability C if the underlying presentation isn't reliable and understandable. It's the foundation.
Good presentation allows good analysis. Makes sense.
And it builds trust. Following a recognized framework like IFRS 18 helps assure users that the information is, hopefully, faithfully represented and comparable. It supports the whole goal of useful financial reporting described in the conceptual framework area A.
So revising this isn't just exam technique for format points. It's about understanding why that format exists and how it helps communicate financial reality.
Well said. Exactly that.
Okay, well, I think that wraps up our deep dive into presenting single entity financial statements for the ACCA-FR exam. We've hit the key points from the syllabus, the study guide, and that visual overview.
Yeah, we covered the shift to IFRS 18, the general requirements like consistency and comparatives, the core statements SOFP, performance with OCI, changes in equity, and those vital notes.
Plus the principles of aggregation, disaggregation, and not offsetting. And crucially, how this links to Level 2 application skills needed for sections B and C using the exam software.
Hopefully this gives you a really solid grounding for your revision in this specific area, highlighting what the official sources focus on.
No.
But, it is just a starting point. Definitely dive into the full study guide for more examples and practice.
Definitely. And maybe a final thought for you to consider as you continue studying. We talked about the specific minimum content and structure IFRS 18 demands. How does that level of detail specifically help users spot potential risks? Risks tied to assets maybe, or liabilities or cash flows. Think about that link between presentation and risk assessment.
Or maybe think about this. IFRS aims for faithful representation. We know that. But it's just ticking all the boxes, following every single presentation rule in IFRS 18, enough to guarantee faithful representation. Does it automatically mean the statements truly reflect the economic reality? What else might be involved beyond just the rules?
Some interesting questions to mull over. Thanks for joining us on the deep dive.
Yes, thanks for listening. Good luck with your studies.